Hey, you guys. I'm sure you remember my client's um, General Dynamics trade from last week, where he played this level off the monthly and almost within 1 or 2 days got his target again, which was a nice about a $40 move, went a little bit higher. But again, these trends they last for long periods of time, and in the markets, nothing goes rarely goes straight up or straight down. So you've got time if you understand where to get into the trend and where the demand is going to be greatest and probably push the price back up again. So I'm waiting now. I set up a trade already. I'm going to be going long at 337.81. First target, 352 quarter. And of course, stop loss at 323.38. Because if this bullish move is going to continue, then what generally happens with these swing high, swing low patterns is, see, if you recall, I said this could have worked to stem the push up and cause price to come back down on the lower time frame daily chart. But now what happens when these breakout retests on whatever time frame you might be trading um, don't work out and instead get to their T1, if price comes back down again to where they started, there's a very high probability that if I get filled down here, that this trade's going to work out. And then, the trend my first target will be the apex of this swing candle. And I'll and then move my stop to break even and then save some shares for a continued uptrend. So that's what I'm doing with GD to get in. And my my client is still in his trade, and he's got his stop loss down where I just mentioned 323. I mean, he got in. Remember, he got in right there. Well, got in at around 316. So he'd be if price came back down there, he'd be stopped in profits and he wouldn't have to endure probably, you know, downside, right? Just because you get good news about a company or there's a positive news flow doesn't mean that it's going to keep trending forever. Here's my Etsy trade. And remember what I did there? I decided to buy some call options in case price didn't come down to $56. Almost got down there yesterday. That's where I wanted to buy some shares. But what I did was I tied my stop loss on my options to the low of this swing high over here, because if price does test here, it should bounce. But if it doesn't and it comes down to the nadir of this swing high, it means the securities going into consolidation. And as far as my call options go, time is the enemy when your call options are running out. Even though I bought options that don't expire for 5 weeks. So again, if you want to work with me and learn how to do all this stuff yourself and manage your own portfolio, send me a text, and I'll we can look at your own portfolio and the stocks you're in and see maybe what you could be doing better. Right? One of my friends was telling me about this stock that his own hedge fund manager put him into. I think this was, it was called Tucow or something like that. Oh, TC, right. So I did a video for him, and he's gonna be taking a bit of a tax loss on this stock. He bought it way higher, and knowing this, I mean, not everybody knows about this, but knows how to read these charts. But knowing that, and I'm surprised his investment advisor didn't clue in to what was going on either, because that they put their clients in this stock up around this area here. And, had I been watching this or, trading this myself, I would have gotten out on this small move down over here that when this level broke. And of course, look what happened, right? So the stock, I told them, is probably not coming back.